Hi traders, S&P 500 finished a second positive week, up by 1.6%. Now we're only right now down 9% from the highs of 2015. February, which started with a crash, is now up by 0.4%. So that's quite a nice pullback, and it's mainly due to the oil prices, which moved up in February by 10%. Now the big question, of course, is what's going to happen in the next month, in March. Now, as we can see, the US data, the US economy data is coming out fine. Last week, retail sales came out good. However, we're still looking at February employment data, which will come out, which will be published on Friday this week. It is expected to come out good as well. So the big question still remains from the Chinese economy and the European, mostly the European banking system. We expect some data coming out in the next few weeks, so the result of this data is mainly going to influence the market on March. So March, I believe, is a very crucial time for the market. The market is going to decide whether it goes back to the highs or probably down to new lows, as I probably believe it's going to continue trending lower, but it's a big question which is right now remains unknown. Let's take a look at the technical formation of the market. When I take a look at the S&P 500, we are seeing the same support and resistance we talked about in the last few weeks, the 1800s and the 1950, which we did not cross yet. We touched over 1950, but we are not over that point yet. So we're still in the consolidation area. The big next level is going to be the 2000. If we're going to cross the 2000 area higher, then probably some more buyers will come in. As long as we stay under the 2000 area, we are still in a downtrend, and the 2000 area, as you can see on the chart, is a very strong resistance point, as was, by the way, a very strong support earlier. Let's take a look at the broader look at the weekly of the S&P 500, and here we can definitely see that the market is downtrending. Again, if a strong pullback will take us over 2000 area, this may change, but right now, as I see it, it is more likely the market to continue moving down and looking for new lows. Let's take a look at last week's swing picks. Our first pick for the previous week was Verizon over 51.20. It did trigger, it hasn't moved anywhere, so it's still in the game. Didn't touch my first target, which is a 3% profit, or my 3% stop loss point. So VZ is still in the game. Second trade was KS failed. It did move down under, that was a short, under $9. However, it moved just by 5 cents and pulled back up to a loss of 3%, which is the maximum stop loss that I take on my swings. Let's pick two swings for this week. My first pick for the week is FIT for a short under 1191. Now, Fitbit is a fitness tracking devices manufacturer. It's probably not doing that well, as you can see the chart. So I'm looking for continuation and short under 1191. Second pick for the week is DLTR, the Dollar Tree. Big chain store company, over 5,000 stores in the US, the $1 company for long. This is the weekly chart. Now, take a look at the weekly chart. It looks great for long. The daily looks good too, but I think the trigger is mainly based on the weekly chart. So for long, DLTR over $82.76. I wish you a great trading week and see you next week.